Hi, Ed. How are you doing today?
Pam, I'm doing great. How are you?
I am thrilled to see you here. Welcome to our audience. I don't think our audience fully understands what we've been through to appear here today. We've been to a cemetery. We're back at a hotel I was at this morning, and I'm sitting in the bar. I may need a drink when we get done with this.
We are proving ourselves technical geniuses.
I said we wouldn't tell all the young people the trouble that we've had with technology today, but hopefully we've got some young farmers watching us because you always offer a lot to every farmer who listens to you speak on marketing. And we're coming into a challenging time as we're looking at harvest and looking at not having enough storage for all of our crop, looking at some low prices. What's your overview of the market today?
Well, it's a very difficult market environment. We're looking at prices that have been, they're off, they're way off, they're lower than production costs by any measure. It's going to be a tough year for corn and soybean producers. There's no two ways around it. I am I'm a little bit amazed. There was a guy out of Nebraska. He's gone now, but Soy Roy Smith used to talk about the John Deere low hitting grain markets in February every year. The idea being that farmers had bills to pay and they would sell grain in February to get the cash to pay bills. And so February was a bad time to sell grain price-wise. Well, guess where the highest prices we've had this year were? February. Corn and soybeans and wheat. We topped out in February. We've had very modest rallies between then and now. And, we just set life of contract lows in corn and wheat, or at least spring wheat in the last week. Soybeans, not quite so bad. It's a tough one. I hope viewers don't have any old crop left. If they do, they're violating the 11th commandment of grain marketing. You shouldn't have anything left in the bin after July 1, and I'm sorry that that's coming true again because we've been lower in the last 3 weeks too.
Sure. Well, a lot of farmers were looking for that summer rally. They figure, we always seem to get a little bump, but that hasn't happened this year either. Is that still possible?
Yeah. It's getting very difficult. The crop conditions are incredible. Well, they're very, very good. I won't say incredible. We've had them better nationwide, but they're well above average. They speak to a record corn crop, potentially record soybean crop. Here in my home state of Minnesota, crop conditions on corn and soybeans are as good or better than the best years we've had on average. And, okay, it's only it's towards the end of July. We still have August, and yet I don't see any weather forecasters pointing to trouble in the next 2 to 4 weeks. And if that doesn't happen, we're probably more than likely going to have record-setting yields in corn and soybeans and pressure on prices.
And that's that's a double-edged sword. We got those low prices, but you still want to make the good crop because you need every bushel you can to sell. Absolutely. But where are we going to sell it? We're looking at demand. You wrote a column in Farm Futures recently about export issues and tariffs. And I believe that was before the tariffs went into effect. And you said, I hope our administration won't do that to us.
Yes.
And they did. So the demand side isn't looking all that promising either.
Well, we got 2 stories going on here. In the world of soybeans, yes, we are struggling. Our relationships with China is poor, and soybean exports are on the defensive, and it's not a good story. On the other hand, corn exports have been very strong. They're heading towards their best year ever as we close out this crop year. Next year is looking like another good year. Might be a little bit off from this year, but from a record high. So on the export picture, corn looks good. From a feed demand picture. Corn looks good. Ethanol holding its own. You know what's the good thing about soybeans? We've got crush margins, soybean crushing margins, as good as just about as good as I've ever seen. Last I looked at, crushing margins based on December meal and oil and November soybeans are over $2 a bushel, and the high, and which is fantastic, which is even relative to a couple of good years. It's all driven, by the way, by a great soybean oil market. Meal is not so good, but here we've got all these the hog market and the poultry market uses that meal. They're in luck. They get cheap meal, and we still get a good crushing margin. So there is a good side to the soybean world, but that lack of exports, that lack of an in with China is holding us back.
Yeah, and that's it. So looking at that, I mean, Brazil on the soy side, they've been selling to China a lot.
Yeah.
On the corn side, they're using more internally, so domestically. So even though they're looking at a record crop as well, it doesn't look like they're going to be selling as much out. So how is that looking on the global demand side?
Well, I'd like to focus on our own export demand, and it's two thumbs up. So that
Okay.
long term, there'll be players. South America will be a competitor. They will be players, but right now it's all good for corn exports.
So looking at that, record crop, storage issues, there's the cost of storage going in. Does a farmer sell off the combine? What's he going to do?
We've got what we have had as these markets have gone lower price wise. The spreads, and this is where people's eyes glaze over when I talk about spreads, but the spreads from the harvest contracts, the December corn, November soybeans, out to the following May or July contracts, those spreads are getting large. The November, July soybean spread, I think, is at 54 or 55 cents a bushel now. The corn spread from December to July is 35 cents or something close to that. If there are people out there who maybe sold hedged new crop grain in the December or November contract, they have a wonderful opportunity to store that grain and move that hedge out to the May or July contract. Even if they did a hedge to arrive contract, they would have an opportunity to roll that hedge forward once. That's a great opportunity to pick up some extra money in the carry and to buy some time for the basis to get better.
There you go. So your recommendation is go for the hedge and pray for strong braces.
Yes, that's what I would go for. Now, it doesn't, that selling the carry, as I just explained, is a good thing. But if you haven't got the grain priced, you're not going to end up with a wildly high and profitable price, but it'll beat the heck out of the harvest price.
Somebody was quoting you the other day, Ed, and they said Ed always talks about getting a nickel. Get a nickel when you can get it. You might not hit the home run. We've been doing a lot of talking about Moneyball these days. Get what you can when you can get it.
Yeah. I'll stand by that. And yet I'd feel a whole lot better, Pam, if we were 50 cents to $1 higher in corn and soybeans.
I don't think you're alone with that, Ed.
Yeah.
A whole lot of people would feel better with that. What could change that might get us a little bit more in this market?
I think we need a supply problem somewhere. Demand is running good, except for soybean exports. It'd be nice if we could get back into the China market in a strong way. That would be helpful. But other than that, I like to think the demand side of the corn equation is pretty good. Exports are good. Feed demand is good. You've got cattle over $2 a pound. The dairy and hog markets are good. They're not as great as cattle, but they're good. Their feed costs are down. I see a lot of positive things. We need someone on the supply side to trip up worldwide.
Yeah. I'm wondering as we're talking about this, it just came to my mind, which is scary in and of itself. But the uh, uh, the the bad thing for beef producers is they're worried that high prices in beef are going to cause a drop in their demand. On the other hand, that would mean that we get more chickens to feed because people turn to chicken when
Mm-hmm.
beef is too. Uh, is that an area where we might see a little more demand domestically? And of course, for folks in the right spot there, that's a good basis bump too.
Yeah, boy, the beef market has proved very
Yeah.
resilient, and it takes a long time to build up supplies in the world of beef. It's something I talk about in my own courses. If I'm raising cattle and I want to sell more cattle into this great market, if I start today, breeding a cow,
Yeah.
I'm about 2.5, 3 years away from delivering something to a slaughter plant. So it takes a long time to build supply. Red meat demand has proven to be very resilient. You don't hear a lot about the fake meats right now, do you? They
Yeah.
seem to have lost their steam. And the equation is so good for uh, people raising meat because you've got the low corn prices, low meal prices. It's just a good equation.
Yeah, it certainly is. And maybe that's one of the things in the down economy, we all turn to our comfort food. Mine's a hamburger.
Yeah.
Well, I thank you very much for your time today. Our audience thanks you. I will just review real quick. You're saying hedge, take advantage of your options, look for a stronger basis. If you have something already priced, go for the carry. Is that what
Yeah.
I'm hearing?
I like that big carry. It's going to be an opportunity at harvest for those who have storage on the farm. And I'll add one more thought. If you have a big crop coming and you don't have room for it on your farm, and a lot of people won't, make sure you have a home for that at harvest. And there are a lot of elevators now. You'll run into them in different parts of the country that will say, look, I won't guarantee you a home for your grain unless it's priced with me before harvest. Something you want to look into before harvest starts.
Go ahead and lock in that price. I was talking to a fellow at the Farm Financial Standards conference yesterday, and he remembered in the 80s, which, we're not there.
Yeah.
Everyone worries about that. But he said, the elevator would call and tell you could bring one load.
Yeah.
They were kind of metering it out,
Yeah.
who could come and when they could come and how much they could bring.
Sure.
So, yeah.
I'd have a conversation with wherever you expect to bring those excess bushels that you don't have room for. Make sure you have a place to go with them.
Absolutely. Well, thank you for giving us a path forward during this time. I think there are some opportunities for farmers to be price makers, and you offered them a couple opportunities for that. So thank you, Ed. Appreciate
Thank
hearing
you.
from you today. And for our audience, we have the Farm Future Survey out there to see, is USDA right? Tell us. And just go to farmfutures.com. Thanks again, Ed. Look forward to reading your column in Farm Futures as always.
Thank you.
Bye-bye.